Thanks. It's great to be here and be a part of this growing ecosystem of startups that we have in Sacramento. I'm going to tell you about our app that lets you take pictures of your investments and share it on a mobile social network. I'm just kidding. That would be a Silicon Valley company, and we build real businesses in Sacramento. So I'm going to tell you a little bit about Riskalyze. We're working to revolutionize how people make investing decisions. That's sexy and exciting, right? There's $13.5 trillion invested in the United States, and these are people's hopes and dreams for the future. So I think it's exciting. Our mission is really helping people, empowering people to invest within their risk tolerance. And that sounds like it should be easy, but it's really not with the tools that we've got and the way that things actually work. Self-directed investors are people who have maybe $5,000 to $250,000 to invest. And we've got a lot of different places for them to get investing ideas on the internet, blogs, Twitter, StockTwits, CNBC, all over the place. We've got a lot of places for them to go execute investments. E-Trade, Fidelity, Schwab, etc., right? What they don't have is a way to figure out how to turn their investing ideas into an actionable portfolio. To basically sift through those ideas and understand which ones fit them and how much money to map to each of those ideas and how much risk is actually in that portfolio and how much reward they can sort of expect. So the data shows that self-directed investors actually buy into largely a portfolio they don't understand. When the market does its inevitable pullback, they sell, they sort of freak out and sell. They wait until the market feels safe again, and then they buy back in at the high, right? So you rinse and repeat that for 30 years, and it's a really great retirement. So it turns out that not much else is different when you go to an advisor, right? Advisors, you generally have to have about $250,000 to be able to get a great advisor to help you, tell you how to invest your money. Advisors, you'd think that they would have some really great tools to help them figure this out and give you advice. It turns out that advisors largely rely on some qualitative conversations with clients and basically hunches, intuition, and what they learned in college. So we want to take subjectivity and emotion and conflict out of investing and replace it with data and with science. So the basis of that is what we call the risk fingerprint. And the foundation that our technology is built on is the academic work that Dr. Daniel Kahneman won the Nobel Prize for in 2002. It's called prospect theory. I could totally put you to sleep talking to you about prospect theory, so we're not going to do that tonight. But ultimately, the idea is our algorithms can take people through about a 5 to 10 minute process and turn what is a psychological piece of information, right, their risk tolerance, into a piece of mathematical data that we can then use to help them figure out how to invest. So we do that in a couple of ways. First, our consumer product, we launched this to really go out and validate our technology in a big way. So it's free, it's on the web at riskalyze.com. We've been in Barron's, New York Times, Buck's blog, NPR's Marketplace Money, and it's been great for us. We've had users build $1.8 billion in portfolios on this tool. They come in, they assess their risk tolerance, they build a portfolio, they figure out how to invest. We've had less than 2% of those portfolios break below projected risk, and we're shooting for 95% accuracy there. So that's been really solid, really stable, and it's been great. A lot of great ways to monetize that, but what has been really blowing up for us right now, so we're very, very focused on it right now, is our product for advisors. So we're helping advisors go out and take a quantitative measurement of their client risk tolerance and actually design portfolios that fit within the bounds of client risk tolerance and create a mathematical foundation for their client portfolio decisions. And if there's one piece of advice I would give my fellow entrepreneurs, it's never forget to watch what your customers are actually doing with the product that you build, because sometimes it's not what you intended, but it's a good thing. So as it turns out, our customers, and this is the first product we've had that has started generating revenue, started generating a lot of traction. We're excited about that. But we're watching our customers actually use the product not just for assessing their current clients, but to go out and actually win new clients. So they're using the tools to assess existing client portfolios and be able to demonstrate to these prospective clients how far away their current portfolio is from where their risk tolerance is. They're able to use that to build rapport and build credibility with a client and win them as a client. So we're sort of in the middle of optimizing for that and making sure that we're taking advantage of that in our sales process with our customers. So we're selling this product for $99 a month or $9.99 a year per advisor. It's a nice tight market. There's about 165,000 advisors. in the United States. And we're not really competing directly against any product. It's somewhat of a new space, but it's a very, very exciting set of capabilities that advisors just don't have. So that's Riskalyze, and excited to answer your questions later.